All right, and just think about this as we go into the afternoon session and the next 2 days. It's something that is important to think about. And again, I always keep bringing things back down to community. Be the best version of yourself. I wrote this. I didn't pull this out. We all have best and worst versions of ourselves. What makes and keeps you at your best, right? We all have high and low points. To me, is the recognition of when you're at your worst is what gets you to be at your best. So it's not about being around people who tell you you suck because they don't like you. It's about being around people who tell you you suck because they want you to get better. Big difference. I think it would solve a lot of marital problems, but it does in a community environment. I just want to share that because as I think about different things and write them down, I think it's important that you guys do that because you are around people who want you to get better, and it's not because they don't like you. So with that, let's bring in Dr. John again. He's all wired up. After John, I'll come on, then Dr. Brett, and then we'll have the cocktail reception.
All right. The first segment of our presentation was really just a bare bones introduction. Now, I always assumed that everybody knew all about the stuff that I had mentioned earlier, and so the next segment, I'm beginning with this quote from this guy that does the news every night on MSNBC, and he has this panel, and he says to them, tell me something I don't know, because that's the important part of why we're here. We want to learn things that we really don't know. All right. So now we are actually going to begin to look at the profile and use it to help us identify future direction. It's one thing to look at things after the fact. It's another thing to look at it in advance and garner information from it to tell us what's going to happen next. So far, this is pretty much the same thing that we've been looking at all along. But let's begin together and take another closer look at what was happening and why we knew that this was buying activity. And not only that, we should be able to identify the intensity of the buying activity. How strong is this buying activity? And I will show you how we're going to do that. Before I tackle that, I just want to revisit something else that we quickly talked about earlier and clarified. Someone was saying that once we got to here, we had to come back to fill it. The reason we're coming back up here is not to fill this. What we're doing is we're coming back up to a point where we had very strong selling pressure. We know that there was a seller here that had a voracious appetite to sell. Translation, a very large inventory. So when we come back up to this zone, the question is that seller still willing to sell at that price? Is that still attractive for them to sell at? And by the way, just because they sold up here doesn't mean they're equally eager, unless really the market's going to continue dropping, to sell down here. So when we come up here, it's not to fill this. The problem is now we have to buy through whatever inventory is left over that that seller has. Okay? So I want you to change your way of thinking. We're not coming back up to fill something. That's a graphical representation. I want you to really understand the reason why when we get back up to this zone, we begin to see activity and intense activity, and it looks like we're filling it, but that's the visual representation. The true reason of what's happening is that buyer had a big inventory, and now we're trying to buy through it, to finish it off. Now, what this tells me is, did we finish it off? We don't know yet, and I'll show you how you can tell whether we did or not. Tune in. All right. Our key cluster here, which was an evening session, happened after the close. Remember, I highlighted for you earlier that the ending periods were very important. Now notice, at the ending period, the cluster really formed above the level of the ending period. We always know that those periods are important because they have a high intense level of volume. This intense level of volume, if in fact was predominantly selling, would I have expected a cluster to form above them like that? Okay, so we haven't even opened yet. We don't know what's going to happen. We're merely analyzing these two sessions relative to one another before the day opens to get a bias and an idea about what's likely to happen. So we're trying to determine future direction. Yes, sir.
So this would be the exact opposite line of thinking of Jim Dalton's overnight inventory corrections in this case.
Okay. I hate to go against my good friend Jim on anything. I mean, he's a really smart guy. But let's say that this is a different way to look at things. And Jim and I have debates about things. We each have different perspectives on how we tend to look at things. So it's not that his perspective, he has a perspective, I have a different perspective. My perspective is I take a look at what happened after my ending inventory, okay? Now, suppose, just for hypothetical, ending inventory, very intense, very high volume, even though very low TPO, right? Low TPO meaning we only had 2 periods, and yet look at the histogram and the amount of volume relative, for instance, to this area here, where we had big TPOs and smaller volume levels. So if all this volume down here was selling, what is the logical outcome if that were the case? Wouldn't prices drop? Right? They didn't. What happened? They started to aggregate above that volume. So step number 1, our cluster is above the prior close. It's also above the value area low. Now I'm borrowing concepts from the profile. And I'm talking about the value area low for the day session, and also the value area low for, and forgive me, I have another doctor in the audience, and I forgot an A for area. And these are mistakes that are unforgivable amongst PhDs. Typos and misspellings and things like that, so I have to apologize to Brett. This is above value area low. And it's 2 different value areas. The value area for the day session, the value area for the evening session. We are also above the volume point of control for the day session. Notice that in spite of all of this activity, for the whole day, my volume point of control ended up near the low of the session. And yet this cluster is above it. What does that tell me? It tells me that even at the level, which my good friend Dalton would call the fairest price of them all, the price where the greatest activity takes place, and I'm serious, that is what Dalton calls it, the fairest price, all of the activity took place above it. So that price is not fair anymore, is it now? Right? Actually, the market tends to think above it is fair. All right? More importantly, number 4, you have a single print here. And what did the single print do? It provided support for me. We never penetrated into it. Now, given those 4 facts, the session hasn't even opened yet. This is all you know. Okay? How many of you would have a negative bias? Huh? All right, I hope not anyone in this room. All right. Do you think that there were people that actually sold on the open? Oh yeah, of course. What did Barnum Bailey always used to say? There's one born every minute. And I mean, somebody had to have allowed the prices to drop here, and they were sellers, possibly even at other higher levels. And probably some of these folks here were sellers. But what happened is their stop losses fueled the move up as the market went against them. Because if you sell, what do you do to cover your loss? I gave it away, the word cover. You have to buy to cover, okay? You buy to cover up here as if you put your stop loss here. If you sold even at the best price of the day, at the high of period A, you still got trapped as the market went above you. and you became fodder for these guys pushing higher. All right.
Would you say that early morning A low
Yes.
is an adjustment of the overnight inventory, long? The overnight inventory had been long.
Okay. The overnight inventory was definitely long. The A period was the first test of the intensity of the buying pressure within the overnight session. Okay? So here's the question I have to you. After period A, we had a test. How much were we able to penetrate into the buying zone? And how much were we able to head higher? Not only that, we took out the high. Now, if somebody at that point still is not convinced we are heading higher, they're high.
No, I believe that. I'm just saying, but if you bought the opens, you could have gotten shaken out instead, you know.
Okay, if you bought the open, you could have gotten shaken out. All right? Excellent point. So now we go on to my next slide. Did I go to the next slide yet? No, not yet. I did? Okay. Yeah, well, the next slide was the open. This is the one I wanted to get to because this is his question. Where would your stop loss be? If you're going to enter on the open, you've established a positive bias. I am buying on the open. I'm an aggressive buyer. Hey, I know my analysis and it's going to work. So now what's the second piece of my strategy? What would prove me wrong?
Acceptance back into.
I'm sorry?
Price went into the cluster that you think was buying cluster, was buying cluster.
Okay, absolutely. So my stop loss would be somewhere here. All right? That's correct. If in fact you are going to enter on the open, you must take that into account. Before you make that entry, you have to be thinking at what level, at what point would I be proven wrong? And I forgot your name? Jeffrey. And Jeffrey gave me an excellent answer. He is going to be my next assistant.
Shouldn't it be at that thin spot right there at the bottom where your A is?
Which one? This one down here?
To the right, the next profile over.
This, no, but I'm at the open. I don't have this yet.
Yeah, the left is there.
The left is there.
He's talking about the volume from the overnight
Volume
profile.
to the right, about 6 inches.
Yeah,
Here, this one?
The gray
Right,
volume,
the other
the
way.
gray, your other right.
The volume from
This
the
one,
overnight.
all we have is period A, right? I'm going to buy on the
Move
open.
left about 3 inches.
The volume of the overnight.
The
Too
overnight.
far, too far. To the right. Overnight volume.
I,
volume.
this one?
Yeah,
To the right of that.
yeah, to the right.
Right there.
Oh, right there. Okay, but this hasn't happened yet if I buy at the open. I don't know that this, oh, you're saying, so really this is from the overnight. I see. Okay, all right. Now, I could put it there, but that's a very tight spot in my opinion. That's a high risk, a much higher risk. It could easily come in, drop here, just, you know, for a test, a slight penetration of the cluster. That's not definitive, and it could take off from there. So if you're going to do that, that's a very tight stop. I know that that's exactly where it stopped, but we don't know that in advance. And I want you to plan your stops smartly, not choke yourself, okay? Conceivably, this is the tightest spot. So yes, I would agree with you. If you really want it to be tight, that's exactly where it is. But other people will tell you it's the VPOC. The safest of the bunch is this one. If we actually take out this whole cluster and we get down here, I'm wrong, we're not going up. I'm sorry? That's right. All right. Well, another part of the strategy is how you're going to make up for that. And you're going to make up for that a couple of ways. One way is you're going to increase your probability of success in your trades. So your winners will be far more than your losers. The tighter my stops are, the greater number of losers I'm going to have if I keep my stops really, really tight. The other way I can manage that is also by the number of lots that I begin to enter with and where my profit targets are, and we'll talk about some of that as well. But all of these are potential levels. The key point I want to stress now, how do I know, how do I see, and how do I detect any of those levels if I'm not looking at a profile? Okay, maybe there are some other ways, and perhaps there are, but the next question would be look at how easy the profile actually makes it for me. Yes.
How would a Goldman Sachs trader look at that then? So that's if you enter the open, but what if you don't enter the open? What would an investment banker do? How would he look at that?
Well, okay. All right. It's a good question because a Goldman Sachs trader will never trade like you and I trade. Okay, for number one. Okay, no, the reason is they already know in advance every level that they're going to sell at and every level they're going to buy at for the day. Because as I told you, they're making the market, they're not reacting to it. We don't have the capacity to make a market. We are not market makers. We are individual traders. So we have to first discern what Goldman Sachs is going to do and react accordingly. You see, so you can't be a Goldman Sachs. I hate to tell you that, but so don't try to act like a Goldman Sachs. Goldman actually probably, if they were trading this, Goldman would have had a buy order right here and an algo that said it ain't going lower than this. We're going to buy, we're not going to let it go lower than that. You can't do that. I know I can't. If it's going to go lower on me, it will. There's no way I can hold up a low. Yes.
Is there any so as far as maybe an order flow perspective or market profile or anything like that, those algos, they have to show up somehow.
They do, absolutely. And where's my good friend Anthony? Oh, he's back there. He is going to show you that. We are going to do an exercise together where I'm going to spot the opportunity on the profile, and he's going to show it to you on the footprint.
Oh, okay, cool.
How do you like that? All right, and that's the way to do it. Identify, and then use the footprint to execute.
And that's so you don't have 4 handles of risk, essentially.
That's right.
Yeah.
Exactly. So that mitigates your risk. Yes.
Well, I think looking at that, I feel like buying on the open is like you're buying in no man's land. You might as well wait to see if they're going to push it down there,
Okay.
so you're not risking 4 handles, right? Is that more the idea?
I agree with you. Here's where I would buy it. Okay. I would wait, and I would see how far low it goes in period A. And I would also take a look at how high it went for that period. All right? And then period B comes along. I would then begin to take a look at the penetration of period B into period A and look at how the big boys know that I will do that. Look at how deeply it penetrates into A. I'm sorry? Oh yeah, it really digs into it almost all the way down to here. Right? Isn't that B is my yellow? Oh yeah, it's only 2 ticks above the low. Isn't B the yellow one? B is the yellow one. Yeah, B is the yellow. No, that's okay. So all the way down to here. And you know why? Because they know that I am sitting there waiting to monitor that. Now, once this happens and we begin to head up above the open of A, I take a look at the order flow within period B during this particular range. And if I have the criteria which I would look at, which would basically be imbalances, I would buy it right about here when it comes back up. Because we've tested the low twice, I have a bias to the upside, and now I have my order flow criteria. And in a nutshell, I will reveal to you what that simple order flow criteria is. I need a minimum of 2 imbalances to the upside within this range, before the open and above the open, once I get above the open.
Like the order flowing balance.
Minimum 2. The other key question that I was hoping you'd ask, what extent of an imbalance? I mean, I could have a 10% imbalance. I need at least 1.5 times 2 of them, and then I also need I also need another imbalance in period A in this same zone. So 2 in the new period and at least one other in the prior period. Now I'm increasing the probability of success dramatically, and I'm also able to use this as my stop loss if that becomes my buying criteria. Because look, I have 3 imbalances. I'm above the open, we're going to head higher. And there would be my tighter stop loss. So you see, strategy makes a world of difference. The more you know what you're doing, the better off you're going to be.
Would that have changed your stop at all? I like the idea of waiting, and then when it comes back and you're entering at that open price, but you don't go
Above the open, when it goes above the open of period A, right.
but you're not in on the open. So
Right.
you have a chance to see it and a little bit of
Right.
price discovery. Would that change your stop? Would you still be the 4 handles on the stop?
No, no, my stop would change. My stop would be the low of the day.
There you go.
At that point, I probably would even venture to tell you I know that we've put in the low for the day when that happens, with that kind of a bias before me. I mean, those criteria that I highlighted for you, those don't happen every day.
So you
Go back and take a look. That stuff, you know, you're awfully bullish if that's happening.
So you really wouldn't be doing a 4 handle stop. That is a pretty big stop. Or do you typically do?
Oh, you're talking about my style of trading? I would not take a 4-handle stop unless I was going into a longer term position. Maybe a day trade, but not day trade, meaning I'll close it, a swing trade would be right, sure.
In an intraday trade, you'd be doing just that, which
Yes,
is a great strategy.
that's correct. That's correct. But I'm not going to discourage someone who wants to, say, buy an option and say, I'm going to stick with it for another day or two. I really see very strong momentum to the upside here.
Well, you
I mean,
know,
that guy's
if it
not
breaks
wrong.
that, you're in trouble if it breaks that, but most likely it's a very strong area of support.
Right, right. And even then, if I buy the option at the open and I end up deciding to close the position, if it goes sideways on me, on the option, I'm not going to lose that much money on yeah,
Cost of the option itself.
right. And the commission. All right. Questions? Have I convinced you the profile can actually anticipate and predict for us potential future direction? All right, good.
We actually watched that this morning when you were pointing out when the chart was live,
Right.
the 2 imbalances, and if it didn't take that out, it would go higher, and it was going higher until we lost it.
Right. And we'll take a look at it again together. Yes.
A question, please. Looking at the last day that you had there with the,
The evening,
no, the following day,
the following day,
yeah, at the top,
at the top.
yeah. Where would you anticipate, or what would be the high probability to continue higher or to reverse?
Beautiful. I love this class because they're always one slide ahead of me. All right, let's go on. All right. The only reason this one I wanted to highlight is some people will, instead of taking the low of the cluster, will use the prior day's VPOC as their stop loss because that was the highest level during the prior day, during the evening session, and they would feel safe with that. I'm a little bit apprehensive about that because, again, it might dip just a tick or two below, take you out, and then head right back up. So anyway, now to my, what was your name, sir?
Mike?
Mike. Okay.
Quick question, where was your stop loss in this, when you said where you would enter, where would you put your stop loss again?
If I entered above the open, my stop loss would be at this gap that everybody was trying to convince me of, and I didn't, because I was focusing on something different. I didn't want to reveal that yet.
If I may suggest to the gentleman, widen your stop. I mean, having it exact and precise, this is where most money is being lost. Because just give it a little bit of a breathing room so that you don't get hurt.
I just have a
Jeff.
quick question. When you have your criteria with the imbalances, why don't you put your stop, like, is there a reason you don't put your stop when the imbalances get taken?
Right at the imbalance. If in fact I'm trading really short term, that would be where I would put it. You're absolutely right.
You're technically wrong at that point.
Yes, you are right. You are. If I was able to take out that imbalance, you're right. I am wrong. But I have to go by my chart in this instance.
Oh, okay.
That's what I see now.
Okay.
Okay? I don't have a footprint in front of me.
I got you.
And so far, we're focusing on the profile and what the profile can tell us. So it can still tell me where my safe stop would be, but it's not as accurate as a footprint. You're absolutely right. Yes.
So for this approach, I mean, you're roughly letting the market sit in or set up for 30 minutes.
30 or more. How do I know it will be more? Okay. How do I know that I'm not setting up just to take out this high? Well, if in fact I enter here, as I mentioned above there, the next key question would be, where would my first profit target be? Top of A, take out the high. Very good. That would be the first profit target. If I take out that high, where's my next target after that? Right there. That's my next target. Okay. The volume point of control zone. I get up there. If I can get past, and look at how strongly I was able to get past that, okay? Then we need to take a look at up above and time force. Actually, before I move on to the next slide, something I want to point out to you. Another important thing that I want you to begin noticing. Only 2 TPOs. Look at the intensity of the volume. Okay? What's this telling me? I'm sorry?
A lot of activity in those periods.
Yes. Market is facilitating trade to the upside. I'm getting more volume up above. And we continue higher. Now, in the new day, it's a lot less volume because this was all buying activity, and the buying intensity is pretty strong, so we sail right through it without even a lot of volume. This is another telltale sign that the big boys have pulled back from buying at this point. They're letting it sit for a while so that a lot of the herd starts selling. So very little volume, but we're trapping a lot of shorts. Notice, B period comes up, can't even take out the high of A. Oh, gee, we're going to go lower. This, we're not able to make it higher. This is the guy who's anxious to get into the trade and takes a short. C comes back up, barely makes it to A, and sort of falters. And then where does D open? Way down here. So that means C closed back here. So C came back on me all the way here. Boy, if the Bs weren't convinced that we're heading lower, maybe now the C should have convinced them the second time we tried to take out the high, and we couldn't, and we dropped right back. How many shorts do you think got trapped there? It looks very logical to me. I mean, gee, we couldn't take out A, B couldn't take it out, C couldn't do it, and then D opens down here and starts dropping here. How many do you think are actually buying down here at this point? Most people are probably afraid at that point. It doesn't look like we're heading higher. We're stalling, and we've had 3 periods now, an hour and a half. We're going to head lower. Long and behold, take a look at what the market does. Yes.
When you're taking profit targets and you're looking at profit targets and stuff like that, do you look at like the footprint to see if you should take the let's say we approach the top of A, and let's say that there's no signs that like selling pressure is coming in or anything like that, and it still seems like the buyers are taking over, will you not take profits there and expect it to go higher, or do you always take profits regardless of what the footprint or order flow is saying?
Okay. If my plan tells me that I want to take my first profit target there, regardless of what the overflow or order flow tells me, I'm taking my profit there. Yeah.
Okay.
If I have a strategy, I stick to my strategy. Okay. Until something really radical happens that would cause me to shift. And most of the time, if it's automated, I don't even have time to get in there and correct it. It continues on. Yes, sir.
So if we see that, we shouldn't think short because I think the answer that we saw our strategy earlier, it's going to be a long day.
Exactly.
So that's why we don't.
Right. Your stop is down here. Right. And we haven't come anywhere close to it. You're more of a strategic trader now. You're not going sort of responding to every rotation in the market. And the strategic trader knows we're not going to be short unless we, in fact, get below this level at this juncture. And notice now, actually, each period that we go, the low of that period is a little bit higher than the one before it. So it's even giving us a telltale that the pressure is still to the upside.
Kind of like a triangle, isn't it? You can see
Yeah, you can see it build up towards the top. The other thing is also take a look at the volume levels. You'll find that up here, the volume intensity will be very low, as you see, and as you get down here, it starts to increase because more and more people are convinced to sell, and the buyers start to pick it up. But if in fact these were buyers up here that were grabbing it, this volume would be more intense, and we would see it shoot up right away. The buyers started meeting them down here. They were more interested there, and they wouldn't even let it come back down in this zone. All right, now I want to highlight for you that we now also have a naked volume point of control from the evening session. So when you see that and you're above it, that also is an indication of upward pressure. Yes?
What's your definition, please, of a naked point of control?
The definition is really quite simple. It is anything that's naked, it means it has never been visited again, because we'll use the term naked for other things as well. It means that this price has, since this occurred, has never been revisited at that point.
But this was just last night. I mean,
Well, it doesn't matter. I mean, today I could come right back around and drop right through it.
okay.
It doesn't matter when it occurred. It could even, my POC probably didn't start up here. It was here somewhere, and it was still naked. And then a TPO came down, visited it, and then it started climbing. Okay. All right. So the key reference levels that we want to keep our eye on: the naked volume point of control, the volume point of control, value area high, value area low, low-high volume nodes, which we will talk about in a moment, single prints and ledges. Okay. High volume nodes. Remember, we were talking, somebody asked, I think it was you, about, okay, so where's our next profit target? My next profit target, if I'm able to clear this and the buyers are still in control, and what will tell me is if in fact I get up to this high volume node. Now notice, this is not a naked point of volume point of control, it's just a high volume node. What is a high volume node and what's a low volume node?
High volume has a lot of volume.
Very good. A lot of volume relative to what?
Relative to the profile, relative to the other areas.
Okay. Within the range of where it occurred, it is the highest volume in that cluster or in that range. So we always have to specify a range of prices so we can identify our high and low volume nodes within that range. So they don't happen in a vacuum. You always have to look at it. In this case, it was the high volume node within that cluster. You see? Okay. Now, low volume node here, low volume node, single print, low volume nodes right here. So we have to look at different ranges. But the high volume node becomes my next target. And we know now that we have buying support here, buying support here, buying support here, questionable here. We will find out for sure if we can, in fact, make it up to there. Okay. Now, in addition to these key levels, the profiles identify for us momentum. How do the profiles do that? With the single prints. Once I see a single print anywhere, that tells me I have strong momentum in that direction. Okay. That's momentum, again, to the upside. Single prints. See how important those single prints are? And, of course, another way to look at it is the low and high volume nodes. What happens after a low volume node and what happens after a high volume node. Did the prices drop after the high volume node, or here we closed above it? So even at the close of this, if I were to force you to give me a bias, would you say your bias would be still bullish or negative? Bullish. Thank you. Very good. You are above the high volume node.
As long as you didn't come back and break distribution.
That's right. It closed on a bullish note. And notice how they do it, right above the volume point of control, just to make it sort of ambiguous for you, you know. Don't think.
That it's, I mean, who's trading? You know, like it's closing it at an exact reference.
And that's what I mean when you say that the market is random. It is not random. I mean, it closed there because it was predetermined that that's where it was going to close. This did not happen by chance. So, high volume node, low volume node. This is a pattern I want you to imprint in the back of your mind. Whenever you see this happen, a high volume node followed by a low volume node and prices head above it, first indicator of momentum to the upside. Why? High level of participation. The high level of participation results in me being able to jump without having to go through a lot of volume and head higher. That is a great combination to look for. Low volume node above high volume node. And vice versa. If I have a high volume node at the top with a low volume node right below it, that I pushed right through it. So the heavy volume was so strong, it managed to push through and create a low volume node right below it. That's a heavy potent seller. Okay.
Based on that, then even though you say that they closed above the POC,
Right?
my bias might be negative.
Well, wait a minute. You're saying high volume node here,
Yep.
and this is the low volume node.
Right.
Where's price now?
Oh, it's above it.
Thank you.
Okay.
I'm not steering you wrong. I'm giving you potent stuff here.
Right.
This is stuff that will knock your socks off, let me tell you. I'm serious. This is a serious move in the market when it occurs. And that's why I really want you to imprint this in your mind. It is a very important occurrence when it occurs in the market. How many people do you really think know about this? Low volume node directly above high volume node, movement above.
Right, but when you look
Now
at that
20, 24 or 25, okay.
I got a question. When you look at that structure, it's not really filled in.
Back to the filled in again.
Well, it is. So,
We don't fill stuff. The market is not there to fill anything for you. The fill is a visual representation. So the key is, I have heavy volume here. Did this volume that come in buy or sell? It bought. And it bought with gusto, or did it buy with a whimper?
Gusto.
Thank you. What more do you want? Do you want the...
Now you're up top.
Well, I should have discerned this well before I'm there.
Fair enough. But now you're up top.
Okay, I'm up top, right.
And so you have all this information from the previous day. the
Right.
next day. You got to carry forward these distributions below that they're not filled in.
That's correct.
Right?
Okay.
And now you come to odds of continuation versus.
Excellent point. Excellent point. So now your question to me, if I understand it correctly,
Odds of a retrace versus.
what's going to happen now? Tell me what's going to happen now.
I think you're gonna
No, I mean, I'm rephrasing your question back to me. All right? Based on the information I have now, here's my honest answer. I don't know. Really, I don't know. So what do I need? More information. So if you're twisting my arm and saying, get into the market, buy a trade here, I'm going to push you back and say, no, I'm not going to take a trade right now. You know, I really don't know what's going to happen.
And all I'm saying is you've got the structure below.
Okay. Now, well, let's say the market drops back here, okay? And then in the next period starts to come back up. And this seems to hold. And then you're saying to me, why don't you get into the market now? Now I'd consider it. Because I knew that there was buying here, and we came back to test it, and it seems to be holding. I am more inclined to enter. But right at the close like that, I would be dubious. Okay.
Quick question. Well, could you restate when you said this was a potent seller? What your
Oh, okay. Potent buyer. This was a potent buyer. Potent seller is the opposite of that. High volume node followed by a low volume node. So reverse that. So the high volume node would be above, the low volume node right below it, price is dropping. That's strong momentum in the market. A big guy came in, pushed so hard, We jumped through a whole segment, that single print, and we're continuing lower. All right?
So the low volume node following the high volume node is a strong indication the market is going higher. So it's actually moving away from that agreement area on lesser volume, but that tends to be exactly
Okay.
what the market.
Because then what we've really agreed on is this buyer thinks that this is an unfair price. There's no more agreement anymore. And the prices are going to shoot higher because the buyer has a much stronger appetite and is willing to buy at prices higher than this zone here. If that weren't the case, we wouldn't have this low volume node. We wouldn't have it sail right through there, right? Because the buyer would still be willing to buy, but they were even willing to buy higher. And that's what created that low volume node. I want you to think of the logic of why it's happening rather than the visual of how it's represented on the chart. A big guy with a lot of money comes into the market and wants to buy every house on the block. What's going to happen to the prices of those houses on the block? Exactly. So here's what happens. Big guy comes in, lots of money. These guys here realize, whoa, I'm way low priced. Their prices jump up. And this guy is still willing to keep buying because he's got a bag load, ton load of money. All right.
So you have the exact opposite scenario on the left-hand side of the chart. You have your high volume node up at the upper left-hand corner.
This one right here?
No, even over farther to the left.
Okay.
Where
Back-
your volume point of control is on your first cluster.
This one here?
Yes.
Okay.
And then-
But where's my low volume node?
If you move 1, 2, 3 segments over, where you have the bunch of.
No, it needs to be in the same session. Don't take me out of my...
Which session is that one where it gets real thin?
See, these two happen in the same session. This happens in the same session. We can't take the rule from two consecutive, it needs to happen concurrent, or one right after the other.